Parent company out with some earnings.
That's right. Comcast just reporting numbers. Earnings coming in at an adjusted 92 cents a share. That is 10 cents better than the street was expecting. Revenue coming in at $29.69 billion. That's also ahead of expectations. There are some changes in the way Comcast is reporting this time around, and that's a reflection of the Sky acquisition. They've been putting in their filings for over a month now that they were going to change things up. The new way they're breaking this out is connectivity and platforms, which would be Comcast Cable and Sky's connectivity products like broadband, mobile, business services, and then the entertainment platforms of those like X1, Sky Now, some of those issues. Content and experiences, which is everything in NBC Universal, including the studios, Peacock, the theme parks. Plus, you've got Sky Sports and Sky Studios. Those are going to be the two reporting lines. And if you break down what you're seeing in some of those issues, you actually see that connectivity and platforms had adjusted EBITDA that was up 3.9% when you exclude the impact of currency. $8.1 billion, adjusted EBITDA margins up 160 basis points to 40.2. They look through some of the other things that are there. You've got best first quarter domestic wireless line ads up 355,000. They've now got, 5.7 million wireless lines in the U.S. With only about 10% penetration of the broadband base. They say that's still a lot of runway. If you're looking at some of the things for the media, content and experiences revenue, that was actually down 9.5%, but that's because you didn't have the Winter Olympics, you didn't have the Super Bowl that you had the year earlier. If you look at adjusted EBITDA, it was down 1% to $1.6 billion. Media results, they break out some of the Peacock numbers here. It includes $685 million of revenue and an adjusted EBITDA loss of $704 million related to Peacock. That's compared to an adjusted EBITDA loss of about $456 million.
Good gains, though, in the number of paid subscribers for Peacock.
Yeah.
I mean,
22 million is the latest number.
Getting scale without anybody.
Well, this is the big question, which is what is the number you need to reach to have demonstrable scale?
For customer relationships, you figure up 5,000 on broadband, total domestic broadband, and as you mentioned, wireless lines up 350,000. And then we always, even though Comcast is not chasing unprofitable subs, people still watch, and it's a big number in a quarter. 614,000 minus 614,000 domestic video customer losses, and that's the cord cutting that we all know is occurring. But you know, you have a certain, let's say you've got X million of those, 614,000 is a quarter. There are people leaving cable, doing other things, and that's why. Luckily, Comcast is diversified, and there's a lot of other things to make up for that.
Studio revenue up 1.7%. Adjusted EBITDA there up 13.3% to $277 million. If you got the theme parks revenue, it was up almost 25% to $1.9 billion. Adjusted EBITDA there up 46% to $658 million.
That's been just the engine that keeps on going, and then you start to think about what happens in Asia when that really opens up, and that number should get even higher, I think.
Check it out right now. You see Comcast shares up by about 2% to $37.24.